Well, hello out there to any interested uh, automated cryptocurrency trading nerds who may come across this video. I go by Dr. Randall, and I'm a old timer of a data scientist, data engineer type, and done been doing work experience for over 30 years. I won't bore you with all the details, but haven't really been into algorithmic programming all that long. I did a little dabbling in cryptocurrency a few years ago. It's very disorganized. I put some money in around 2019, and then got really excited in 2021. I think it was when Bitcoin surged up above 60,000, and I thought, I made a lot of money. I made a lot of money. Not a lot of money, not enough to buy a really good television. Maybe I didn't have that much in it, but I was really excited. And rather than selling when I should, I got greedy. Thought it could go up even more, so I better hold on to it. And then it crashed down to about 30,000, and I sold it then. Still made some money, so I can't really complain. But I felt bad about it because I could have made a lot more money. Could have made twice as much money if I'd have just known uh, when to sell it. And so, and that's one reason I've never really gotten into investing is because when you have stuff in the market, and you have to have some uh, organized system on knowing when to buy and sell. Otherwise, emotions come into play. Anxiety rules your mind. You end up doing things exactly the opposite of what you're supposed to do them, rather than. I mean, you when something starts surging, you say, "I need to get on that train," and you you buy in at the peak, and then it starts to crash, and then you get all anxious, and I'm going to lose everything, and then you sell it, and you lose. Uh, in my previous experience, I don't think I've actually had any winning trades. It's just that I tend to be so averse to losing anything. I'll just let the money sit in there for however long it takes to go back up, and then I finally sell it and just make a little off of it. And that's really not the way to do it either. So anyway, I got onto a social network. I won't say what it was about a year ago, and started getting hit with all sorts of people trying to get me into crypto. And so, and I knew these are all scams, so I didn't fall for any of them. But it did get me interested in to start looking at it again, and that's when I came across this YouTube made by I think his name is Rhett Reisman, where he has a uh, a bot program that actually runs periodically. I think he has it set up to run about once a week, and he calls the Alpha Squared API to get the risks on cryptocurrencies, and then based on that Alpha Squared strategy, he knows how much to buy or how much to sell. And so that got me interested. I started looking into Alpha Squared, and uh, it made sense to me. It seemed like this is a solid algorithm. These guys who did this have a really credible product. And so Rhett Reisman has his project as an open source library that was available on GitHub. So I downloaded it and made a lot of customizations, changed a good bit, and then deployed my own version for a few months out in the cloud. I do a lot of cloud work, and so I have a CryptoBot, put out a CryptoBot. That's what I call it, the CryptoBot. I'd sometimes call it the Cryptomatic, a lot of cute names. And it runs, I have mine running every hour, and it I set up an Alpha Squared account, and I have this CryptoBot triggered once every hour. It calls the Alpha Squared API, gets the risks on certain cryptocurrencies, and downloads the strategy, and does a calculation on whether to buy or sell. And then normally about once a week, if the risks are low, it will put in a buy order on my crypto exchange account. And if the risks go into the very high sell bands, and let me digress a little bit, with the Alpha Squared risks values are numbers from 0 to 100, indicating the risk of having that cryptocurrency at the moment. I won't go into explaining it all because the Alpha Squared IO website does a good job of that. I'll let you look that up. But if the risk is, say, like only between 0 and 10, you usually would buy a larger amount, not a huge amount, maybe like $179. I think that's what the low risk band is for me. And then if it goes into the next higher band, you might buy $130 worth of that cryptocurrency in that week. And as it goes up into the mid bands, like 50% risk, you don't do anything. You just hold on to it. It's kind of a middling area, and you don't really want to do anything. But then if it goes up above 60, say 70%, then you start selling. And if it goes all the way up into like above 90, you normally just dump everything you got. And so you might, as it goes up at these higher risk bands, you might hit one band to sell 10%, and then it goes to the higher band, you sell the next 20%, the next higher band 30%, and then the highest band you sell off the remaining percent. And so I had this running for a few months, and it seemed to be doing pretty well. Yeah, I did put quite a bit of buys into Ethereum, especially some into Bitcoin, and then around the August time frame, Ethereum started taking off, so I got really enthusiastic about it. And so I wanted to tune my algorithm to be to know more of what the optimal parameters were, and I wanted to add a lot of parameters, like how much do I want, what's the minimum balance I want to keep, when I do a sell, for instance, what's the value I want for the limit price? Do I want to? So if you do a trade on the crypto exchanges, if you can either do market orders or limit orders. Limit orders is when you don't, you say that when you're doing a sell, you might say sell this if the price goes up about 5%. Or if you're doing a buy, it's normally buy if the current price goes down by like 0.5%. And so I wanted to figure out all those parameters. So around September, I completely rewrote this cryptocurrency program from scratch so I could understand it inside and out and add my own tuning parameters and arguments and things to it. And that's when I came up with this. And this is a simulation program that uses the very same code that my actual new cryptocurrency trading program I have running periodically in the cloud uses. And I wanted to be able to do that so I could try various parameters and figure out which ones work best, because I want to make the best profit. And what we have here, this is a program called PyCharm. It's used to, it's a popular coding environment for Python, and that's what I'm using for this. So I go up here and I can run this, and I'm running this on historical data as though it were running my CryptoBot for the year from November 2024 to November 2025, the past year, because I downloaded all the price data for 7 different cryptocurrencies, and that Alpha Squared compiles risks for, and join that historical data with the Alpha Squared risks on those days. And so I have this step through that time period a day at a time and make the simulated trades just the same way as my real CryptoBot out there in the cloud does, because I wanted to see exactly how it would have done if I had done this. So if I'd been doing this for a year, I have it print out the results to the screen. If I'd been doing this from November 2024 to November 2025, yeah, I would have put in about $18,000, and I would have made almost $3,000. So it's not terrific, but it's not bad. And these graphs that I have it make, these plots, the one on top, the orange line is the total balance in my account. And the blue line down here, I'll magnify this a little bit more, that is my USD balance, or USDC actually is what I use. And one of my parameters is to set up a minimum balance that I keep. And if every week I'll check the balance, and if it goes below that balance, I'll add enough money to bring it up to that minimum balance. And that way it always has sufficient cash to do the triggered trades. And so as you can see, it's this little kind of sawtooth plot. That's my USDC balance, because it's constantly doing buys and putting that into crypto. And these little red triangles are the cells. So back in late 2024, there was a spate of cells, and it doesn't really do much to the USDC balance, because that was so early on in the investment period that there wasn't all that much crypto to sell. And this next graph, this is the light blue is the total invested, and the green is the amount invested during that particular month. Each of these bars represents a month. And so as you can see, that also if you look down here, the maximum monthly deposit of $26.89 occurred in March of 2025. So going over to 2025 here in March, there was that maximum monthly deposit, and there was one almost the same height in looks like June of 2025. And these graphs show the balances of the various cryptocurrencies. I have it doing Cardano, Bitcoin, Polkadot, Ethereum, Chainlink, Solana, and Ripple. And as you can see, early on, it sold some XRP, it sold some Link, and sold some Polkadot. But again, yeah, it sold a little bit of Cardano. But again, since the balances were so low, it's not reflected as a very large jump right here where it happens. But what happens if I go run it for over a longer time period? So I usually run it directly from PyCharm, and I just go over here and I'll set the start date to 2023. That'll run it for 2 years with these parameters. Run it again, and it'll start printing out a bunch of log messages indicating the various actions taken. As you see, most of them are just holding because it's running over every day, and it generally does a maximum of 1 buy per week. Sometimes multiple buys, because if the risk of a given cryptocurrency goes lower into a lower band during the week, it'll do another buy. But if, as long as it stays in the same band or goes up to a higher buy band, it won't do more than 1 buy per week. So now it's starting to look a little better, because this time I have a profit or loss of $31,614 and so many odd cents, and for a total investment of about 36,000 or so. And here's the graph here. Now if you look at that time where it had the spate of sells, there's a much larger jump in the USDC balance, because it had an entire extra year to build up balances of those cryptocurrencies that it sold off. So you see a very large jump in the USDC balance. And there's a corresponding area right here in the second graph where it shows the monthly deposits that were required to maintain that minimum balance, where there's no monthly deposits at all for 4 months, because it was reinvesting the profits from those sells. And let's go back even further. Let's go back. So that we're at 2 years now. Let's go to 4. 2021. Watch it scroll, watch it scroll, watch it scroll. Now we build up a profit or loss of 288,371, and total deposits of 102. That's about 104, a little more than 104,000 over a 4-year period. And here you see the graph of the monthly deposits. And then you have fairly large period of no deposits being necessary at all. This fairly long period where you had fairly significant deposits necessary. And then it reinvested all that available balance here, and then it required more monthly deposits here, and then since then, it looks like there's only been 1 month that it's required any deposits. And so what would you do in real life here? Well, what you would do during these periods where you had no investments required, you just be regularly socking money away in some other account, or let it build up in your regular 401k. And then when it came time where you actually needed to keep up the minimum balance for this investment, you just pull it out and transfer it and move it over here. Now lastly, and then I'll stop going through this, I'm going to run it for 6 years. Did a lot of scrolling. Now, incidentally, the way I accumulated all this data is I just used the Yahoo Finance Library and just downloaded all of the open, high, low, close, volume data for every day for all of these cryptocurrencies for which it kept records. And to get the alpha squared risks, I just went to the alpha squared website. I have an account, so I'm able to look at the performance over time, and I just did some web scraping to get those risks. And then I used the data science programming skills I've acquired over the years to join all that data into files that could be loaded as pandas data frames. And if you're a Python person that does data science, you know all about pandas, I'm sure, but it's not a zoo animal. It's just, I think it stands for panel data or something like that. But here, now this is when it gets exciting. 6 years, woo, $2 million, more than $2 million built up. A total balance of $2,239,930.46. And a total investment required of, good grief, less than $70,000. Now, why would it require even less money to build up more? Well, at the beginning, there was some significant monthly deposits involved. You can see here this entire period from sometime in 2019 to near the end of 2020, there were some significant monthly deposits. But then you had all of these cells that blew up the USDC balance. And so no deposits were necessary at all for this like more than 2 year time period. And so during that 2 year time period, it was reinvesting all of that in the various cryptocurrencies till the balance got low in the USDC account, and it had to start doing monthly deposits again. And then there was another spate of cells. And then for the last 2 years, it didn't have to deposit a thing. So this is like a 32-fold increase over 6 years of the amount invested. So yeah, I'm convinced now that the alpha squared technique of investing in crypto is a very sound one. It is a very sound strategy, and I'm going to continue working on this and finding other tweaks and do more research because I can only get it to improve. Another thing I've done is I wrote an optimization program that actually runs this program. I wrote the simulator program so I could run it manually to figure out the best combination of parameters in my algorithm for my crypto auto trader to do investing. And I thought, well, what if I wrote a driver program that pretended to be me, that started off with one set of parameters and just kept running that simulation program over and over and over in a loop and optimized it. So I could let it run for a day to find the most optimal set of parameters. And I have that running as well. And that's one reason I came up with the parameters I have. And it's doing quite well. And I think my next step is going to be writing programs to optimize the strategies themselves. I'm currently using the moderate strategy for most of these cryptocurrencies. And I have one aggressive, and you can guess which cryptocurrency I'm using the aggressive one on. And so there you have it, and I'll stop yapping and go ahead and get back to me, make comments if you'd like. I'd like to hear your input, your ideas, and so I am signing off. Hope you enjoyed it.